Hi, Spencer here, and today I'm going to talk about how to tackle the big three triangle chart patterns. Now, if you're familiar with chart patterns, you'll know that there are three types of triangle patterns, but not all of them are created equal. Some are better for trading, some are a bit more tricky. So today I'm going to share with you how you can identify which are the better patterns to trade. Now, what you will learn from this short video, first you'll learn the underlying psychology behind the triangle chart pattern, and which are the big three types of pattern, right? And how to identify, how to sort of differentiate between the three different types of triangle patterns. I'll teach you some simple trading strategies that you can use to trade the pattern, and also which is the type of pattern that you want to avoid. And lastly, I'll share some tips to increase the odds of success when you are trading this pattern. Okay, so in some of our previous videos, I classified all types of chart patterns into reversal patterns and continuation patterns. So in the previous video, we have covered some of them. So today we're focusing on the triangle series, which is under the continuation patterns, meaning there tends to be a higher chance for the price to continue moving once in the direction of the prior trend, once you have spotted this triangle pattern, right? So I'll talk a bit more about that in the last segment. Okay, so these are the three main patterns. The first is the symmetrical triangle. You can see that the reason it's symmetrical is because it is quite balanced, meaning you have one line that's sloping down, one line that's sloping up. So the price more or less moves in between the two lines in a pretty balanced and symmetrical manner, hence the symmetrical triangle. And for the ascending triangle, you can see that the price is slowly increasing. So you sort of see higher highs and you don't see higher highs, sorry, you sort of see higher lows, right? Because the bottom line is sloping up and ascending. So you will see a series of higher lows, whereas the top line tends to be flat, right? So this is the line that needs to be broken, right? And it's ascending. So the descending triangle is the opposite. You see one flat line here and one line that's sloping down. So you'll see a series of lower highs until the price breaks out. So the three types: symmetrical, ascending, and descending. Okay, so what you need to remember is that the symmetrical is more neutral, meaning the price have equal odds of breaking up or downwards, whereas the ascending it has higher odds of breaking upwards, it's more bullish, and the descending tends to be more bearish, so it has higher odds of breaking downwards. Okay, so this is how the symmetrical triangle will look like on the chart. You will see a line, one line sloping down, connecting the prior highs, and another line that connects the prior lows, which is sloping upwards. So the prices are sort of sandwiched, right, between the two lines. Okay, for the directional triangles, right, which is the descending and the ascending triangle, you can see that one line is flat over here, right, whereas this line is sloping down. So price eventually breaks below the flat line, right, and continues downwards. Okay, whereas for the ascending triangle, this is bullish. So you see that price is heading up. It forms the consolidation. This is the flat line, and this is the sloping line, which is the series of higher lows, and finally price breaks upwards, right? So that's a bullish pattern. Okay, so before we talk about the trading strategy, right, what is the psychology behind this pattern? Because the psychology will help you understand, right, what the market players are trying to do. So you should know, what either side is trying to go for, right, and what are the clear signs that that which side has won the battle. So in this pattern, the buyers, right, represented by the bulls, and the sellers, right, which are the bears, they are fighting to gain control of the direction. Right? So quite often you see this when after the price has moved, after the price has moved quite a bit. Okay, let me draw it out. Right. So for example, right, in the trend, if the price has moved, right, eventually you will see some sort of consolidation. Right. So this consolidation over here, right, if it takes the form of a triangle, right, it is the buyers are trying to continue to push prices upwards, right? Whereas the sellers are trying to push prices downwards. So this consolidation is sort of the battleground for the buyers and the sellers, and whoever wins will result in a breakout of of the existing trend, right, or a change in the trend. So when you're observing the triangle pattern, the main idea is to try to determine who has the upper hand, who is more likely to win. So in a symmetrical triangle, I would say it is pretty balanced. So that's why it's a bit harder to tell who is going to win, right? But for an ascending triangle, right, the bulls have the buyers have an advantage, whereas for descending triangle, the sellers have an advantage. Okay, so what are the trading strategies that you can use to trade once you have successfully identified the pattern? So I've identified two types of strategies, right? The first is the breakout and the second is the pullback. Okay, so let's look at the chart over here. So this is the descending triangle. Okay, so if you want to enter on the breakout, once you have identified, right, that this, right, is indeed the pattern over here, right? So you want to look for the opportunity when the price actually breaks below this support, right? So this is the key, flat line, right, for the descending triangle, right? So this is the area where you see the price actually breaks, right? So that will be the breakout entry, right? So if you are looking to enter on the breakout, you can enter here, right? And you'll probably place your stop loss somewhere around here, right, to give you a little bit of buffer, right, while targeting, right, for the move downwards, right? So that's a very simple, clear-cut breakout entry. Okay, so similarly for the bullish, the ascending triangle, right? You identify this is the clear flat line, right? That the prices are trying to break out, right? So you can see a series of lower highs here, right? The price is pushing upwards, right? So you are looking for a breakout somewhere at this point as well, right? So once it breaks and you see a strong price action, this is where you can try to take the long entry, right? And maybe you place your stop loss, right, somewhere below over here. Okay, so this will be your entry. Okay, so for here, right, this will be your stop loss and this will be your entry. Okay, so that is the breakout. Right, so now the second type of entry is the pullback. Right, so if you didn't manage to take the first entry, right, quite often you can wait for a pullback. Right, so in this scenario, there was actually there was a pullback, right, quite a large pullback actually, right, which means that you could have taken the opportunity to trade, right, this move over here, right, so you could have taken a short somewhere over here, right, and then you place your stop loss, right, higher over here, right, and you can have gone for another move downwards. Right, so down here you don't really see any pullback, right? So sometimes when the breakout is very strong, you might not get a pullback, right? So what you have to do is you probably might have to zoom into a smaller time frame because the pullback, right, might have occurred, right, somewhere over here, right? But it happens on a smaller time frame, right? So these are the key strategies. The idea is to find a low risk entry point, right? The key thing is to first look, right, for confirmation that the price has indeed broken the level, right? So this flat line over here and this flat line over here, right? So once you are sure that the price action is strong and it's taken out the level, do you look for a low risk opportunity to enter, right? Either on near the breakout point, right? Or if you have missed, entering near the breakout point, then you try to wait for the price to pull back, meaning to come back to the breakout point, and then you can make the trade, right? You can take the entry. So those are the two key simple strategies that you can use to trade this pattern. Okay, so which is the pattern that I was talking about to avoid, right? And that is the symmetrical triangle, right? So earlier on I mentioned that it is the reason for it is because the forces of the buyers and the sellers are quite balanced, so it's quite hard to get an edge in the market. Okay, so let's look at an example for a breakout for the symmetrical triangle. So this here is the symmetrical triangle, right? And we see that the prices have broken out over here. Okay, now the tricky scenario is because even after the price has broken out, you can see that there will be another resistance above over here, right? That's because it's in a range. I mean, it's in a narrowing range, right? So therefore, there will always be another, there will always be levels that are higher, above the price, right? So that makes it hard to determine whether the price has indeed, the trend has indeed resumed going upwards. Because you see there's going to be resistance here, right, and then resistance here, right? So even when the price breaks out over here, you are not sure whether it is going to, have clear grounds to go all the way up, right? So that is the big problem, because what might happen is that this might still be in a big range, right? So even if the price goes up, it might come back down again, and then it might continue going in the range, right? So therefore, it's quite hard to tell when the symmetrical triangle has actually successfully, broken out and continued the trend. So one of the easier way to trade the symmetrical triangle is actually to just wait until it clears the highest point, right? So in this scenario, only up to here where it has managed to clear the resistance, right? So you'll be taking the trade much later, but you have much better confirmation that a much higher success rate, right, as compared to taking a breakout over here. Okay, so that's for the symmetrical triangle. So how do you increase the success rate overall of all the trades, right? So I'm going to share with you three important points, right, that you can use to increase the success rate of your triangle chart pattern. Okay, so the first is to try to trade with a larger trend. So if you notice for the previous examples, right, it is when the market is on an uptrend, right, it's much easier, right, to trade with the larger trend. Okay, so in this scenario, this is actually sort of a reversal, right? This descending triangle actually changed the direction of the trend, right? So as you can see, the movement is not as strong, right, as compared to this when you are trading with the direction of the trend, right? So down here you see a large pullback, right? But down here you don't see any pullbacks, right? Where the price just continues going strongly, right? So I'll say that it's going to be much easier if you trade, right, in the direction of the trend, because you have an additional edge, right? Based on the momentum. Okay, next, right, you want to see whether it is part of a larger pattern, right? So sometimes if you are looking at a major say a major reversal. Okay, so for example, right, if it's say an inverted head and shoulders pattern. Okay, so this is one of the patterns which I talked about in the previous video, right? So this is a bullish reversal pattern over here, right? So sometimes you might see that you get a triangle that forms, right? Ascending triangle, right? That forms somewhere over here, right? So if this ascending triangle forms here, right, it is part of this larger pattern, this larger bullish pattern, right? So by itself, maybe the ascending triangle is a little bit bullish, right? But with the additional huge bullish reversal pattern, right, then you sort of like are stacking, right, the odds, because now your small bullish pattern is part of a larger, even more bullish pattern, right? So this is something that you can look out for when you study the whole chart. Okay, and the last thing is to look out for major support and resistance levels, right? Remember when we talked about clearing the levels, right? So this is an example of the key support or resistance levels, right? So uh, if this level over here, right, happens to be a major resistance, right, and the triangle forms right at the resistance. So for example, if this is a historical major resistance, right, and the triangle forms just at the point where this major resistance is, right, you can tell that once price manages to break through, right, it's going to be very significant, because the whole point of this battle of this triangle, right, is sort of to consolidate power to attempt to break through this level, right? Similarly, if this level here is a strong level, right, then this whole pattern here is trying to break through, right, this level, right? But as you can see, because down here this already has already broken this level, right? So this support, right, I would say it's not as strong as this resistance level, because there isn't anything, right? There isn't anything that has taken out this level in quite a long time, right? So depending on how strong the support and resistance level they are trying to break, right, it could hint at how strong the subsequent price movement will be once it has successfully cleared the level. Okay, so just take note of these three important points, right? Trade with a larger trend, look for whether the triangle is part of a larger pattern, and also look out whether it confluences with any major support or resistance levels. Okay, the last thing is to know how to measure the target, right? So once you have entered the trade, where are you going to take your profits? So triangles have this very interesting property, right, where you can measure. So you can measure the maximum height of the triangle, right, and use it to project downwards, right? So that will give you your target. Okay, so same for the bullish triangle, right? You measure this height here and you project it up here, right? So that will give you your target. Okay, so there's a very useful method, right, that allows you to calculate what is the potential profit that you can make for each trade. So when you have taken your trade over here, right, and you have your stop loss here, right, and your entry price, then you will be able to see, is it based on this risk that you're taking, is it worth, right, the potential profit, right? So similarly for here, right, if you have made your entry here, right, and you place your stop loss here, you can see, is this risk here that I'm taking, is it worth, right, the potential profit? Okay, so that is how you can use this triangle pattern to calculate, right, or to get a measurement for your target as well. Okay, so I hope you have enjoyed this video, right, and learn how to confidently trade the triangle pattern, as well as to know which type of triangles to look out for and which ones to avoid. Okay, so I hope that you will after learning more from this video, right, you have the confidence to go out and trade, and also most importantly, do check out the rest of our educational videos, and most importantly, don't forget to subscribe for our channels where we have new videos that come out every week. So that's it for this video, and I'll see you in the next video.